Hi, folks. Dan Bird with the Daily Scan. Today is Friday, February 14th. Happy Valentine's Day to everyone. Looks like the bear is trying to make up to us here on Valentine's Day, bringing us flowers. Isn't that nice? So I'm going to make this quick today because I am taking my Valentine out for dinner tonight. So I'm going to go through a pretty quick one. Hopefully, I can cover as much as possible. As always, I am not a financial planner. Anything I say is for educational purposes. It's not meant to imply a recommendation to buy or sell anything. So let's jump into it, take a look. I have not updated this yet. I'll do this later on. Market actually just closed, so I'll update the website later, or it might even be tomorrow morning. But let me jump into the dashboard, see what happened today. So the Dow was down, S&P was flat, NASDAQ was up a little bit, NASDAQ 100 up a little bit, the VIX was down. So the VIX is still telling us that the market doesn't really have much concern on what's going to happen. Communication services is the top sector, along with technology. So both of those are aggressive sectors, made it into the top this today. And discretionary is right there in the middle. So that's actually good news for the market moving. The industry groups gambling right here. I talked about gambling a few days ago. I guess it was signaling to us then, and DraftKings looks like they reported today and had a great day. DraftKings was up significantly today. The number one on the top 10 list was this one, KC, which I don't really know what they do. Kingsoft Cloud Holdings. This is from the top 10 list that I put together. APP reported yesterday. They had a great day today. TEM is Nancy Pelosi's stock. Just continue to help her get rich. ASTS, actually higher than previous day, a couple of days ago. And SoFi actually hit the list today as well. On the bottom of the list are these two, SoundHound and Serve Robotics. Both of them AI stocks. Both of them had announced potential partnerships with NVIDIA. NVIDIA today said that they will probably not be pursuing those partnerships. So SoundHound gave back 28% and Serve Robotics gave back almost 40% today. So I'm going to look at those here in a second. Let's actually do that right now. So here's SoundHound. And you can see after a huge run, after the NVIDIA announcement that they were looking at partnering with them, and now they said they will not be. As always, I would have been out right here when it closed below the 21 day. That's the first major signal. Went down to the 50 and bounced, and then came back to the 50 and tried to make it back up again, but it got a medium-term down signal there. So that was the second signal. And then, of course, today didn't do it any favors with huge volume. If we look at Serve Robotics, that's what that looks like. It's had a huge run up here after the announcement and then pulled back and then kind of went sideways and had a great day yesterday. This is one that would have been more difficult to trade because it was above the 21 day. And if you had put your stops in right here, those stops would have been taken out with that gap down today, as I talked about yesterday. So not good for those. While I'm here, let me take a look at some of the stocks that people have asked me about recently. So first, I'll look at HIMS. HIMS had a fantastic day, but it ended with a bearish candle. That is a shooting star candle. I did candles on the Technical Tuesday for anyone that wants to review how to read candles. That's on the Technical Tuesdays, which has its own playlist on the channel, but had a huge run up. This is a short squeeze. It is interestingly not on the short squeeze list that I get. It's actually Tom Bowley puts that list together. But as I always say, shorts do not feel pain until they get above where they shorted. So for this, they shorted right there, and they would feel pain when they get above it. And sure enough, right there, that's when they started to cover. Some of them held on, and then looks like everybody covered right here. So it's a combination of people buying in when it goes above the resistance line, as well as shorts covering. And then a huge short covering happened yesterday, and today ran all the way up. That is a failed failed breakout. What I typically would do when something goes parabolic like this, and it had already started going parabolic. When it went up like this yesterday, what I would do is put a 5% trailing stop on it, and that would have been stopped out today, right there. But you would have captured all of that run. So I would not be getting into this right now, but it's had a fantastic run, so looks pretty good. And yes, it is a short squeeze. 30% of the float is short. So that does qualify for as a short squeeze candidate. I talked about one yesterday. Let's just take a look at it, which was Laser. It was also a short squeeze candidate, but it still has work to do. There's still, people that have shorted here and here that are not feeling pain yet. So we got to be careful with this one. I've got my stops in. Pull back today. That's failed breakout there, so it might start coming back. So this one might not last very long, but that also is a short candidate. That's also 30% of the float is short on that one. Okay, so let's take a look at RZLV. I don't know what this company does, but terrible chart. Definitely do not like this chart. All through this period over here, I don't really know what the news was in through here, but volume was really low. Let me see if I can see what volume was. Volume, 68,000 shares at about $11. So $11 with 68,000 shares. I mean, I like volume to be above 100,000. There's one day with 18,000 shares. So that's extremely low volume. Now, volume has picked up a lot lately. So something happened down here, and I don't know what the news was, but something got it to perk up and volume picked up significantly. It's fallen back ever since it hit this peak. And right now it's making some higher lows, which is good. And it was trying to make a higher high, but now it's not. Looks like it actually might now be making a lower high. So if that's the case, we just take it right from the top up here and draw a line like that. That's pretty much what it needs to do before I would entertain getting into something like this. I usually don't trade stocks in this price range, and most big firms on Wall Street have a rule that they don't trade anything less than $5. So Wall Street, this is all retail. This is all retail traders. It needs to get above about 350. Yeah, probably about 350 before I think it will be proving that it's on an uptrend. And it's got the 200 data to contend with up here as well. So not one that I would trade, but looks like it, if you want to buy cheap stocks like this and gamble with them, it's sort of like going to the casino and putting it all on black. You might win and you might lose. No way to tell which way it's going to go. All right, so that's that one. The next one is Open. This is another low price stock, $1.50. And same thing. This is, it's got to get above the 50. It's got to get above the 200. It's almost just like the one I just looked at. But I'm going to draw a downtrend line, probably, let's see. Let's get a downtrend line, probably somewhere like that, which is pretty much at the 200 day right there. So if you're not in it and are thinking about getting into it, then I would be out when it gets to the 200. It gets rejected every time it gets to the 200. Gets above it a little bit, but gets rejected. It looks like, and the question was, is this a bearish wedge? And I am not necessarily seeing a bearish wedge, although you might potentially do something like that. That would be a bearish wedge, maybe. I'm seeing more of a rounded bottom, which actually is positive. So it may come back up, but again, it needs to make a new higher high to confirm an uptrend. And in fact, let me just go back. Let me go back let's go back 3 years. Just want to see how far back this downtrend goes. Let's go back 5 years. All right, so there's where it started way back here in 2020. So now we draw a trend line from the top. We draw one like that. You've got a double top right here, just below 5. And then you've got this trend line right here. So I would say I'm pretty confident that if this does start to move higher, it's likely going to get rejected again right there around $2. If it doesn't, it's got a lot of people that have bought and just want to get out, just want to break even all the way back here. So a lot of overhead resistance that has to get through. So this is, again, not one that I would trade, but if you're just thinking about getting in, you could take the risk and play it up to about $2. If you are already in it at some of these points back here, then I don't know. I don't know what to tell you. I don't have a suggestion. I'm just pointing out what the chart looks like, and just does not look good. All right. Next one is one that a friend of mine sent to me, and it's one that he and I traded years ago, called HiMax, and this goes back 5 years, same time frame. And what I want to do is first put in a trend line here, roughly at about these highs. Okay, come on. Trend line right there. So you'll notice that trend line from 5 years ago. And I told him I will not trade this any longer because it's just too volatile. It has lots of promise. It's an interesting company. It's a semiconductor company based in Taiwan. They just announced a potential partnership between NVIDIA and Taiwan Semiconductor. That's the reason that it shot up like this, but it's done that before many times. So obviously everybody that bought way back here 5 years ago, 1, 2, 3 times, really almost 4 times, just want to break even. So all these people that have been sitting there holding it for so long, gets up here to just about $13, $12.50, and they sold out. And it pulled back pretty substantially. In fact, if I go back 10 years on this, you can see right there that those are the highs even going back 10 years. So huge downtrend here. Try to come back. Just look at how jagged that is. Very volatile, difficult to trade. But if that partnership is true and it gets confirmed, then this could potentially break out to the upside. But it still has a lot of overhead resistance right there. And you can see what happened, this parabolic move about 3 weeks ago in January, in about a week and a half, went all the way up, broke that resistance, and then pulled all the way back. And the very next day, gapped lower and continued to sell off. So all those people that were trying to get out at break even, and then they said, oh, I missed my chance, pull back again, and they started getting out there. And now it's starting to come back, and with pretty decent volume. So it looks like it's taking that news seriously. And if it does get confirmed, then it will likely break through that for the first time ever. But I suspect it's probably going to pull back again. But this is one that I would highly recommend you take a look at the news, all the news that's out there, do some research on it. Semiconductor company, it is interesting technology. So it is something that, when we read about the technology years and years ago, we thought this is a stock that really should do something, but it really hasn't through all that time. But anyway, that's what it looks like right now. All right, let's jump over to the daily scan, which I promised I would be doing weekly scans today on Friday. So this is one right here. These are optionable stocks. This is one that I just ran weekly. This is the weekly squeeze, meaning that the histogram is just getting ready to cross the 0 line down here. On the weekly chart, this has already had earnings, which is good. So ASML Holdings. The way that I've laid this out is I have the weekly on the right-hand side. I have a daily chart using the Keltner channels just to give me a sense. I like to buy in the center just to give me a sense of where the extremes are. It's even better to buy at the negative extreme down here and like down here, because that's where it usually reverses. But I don't want to buy it up here at the 3x extreme because that usually ends up with a pullback back to the mean like it did right there. So that's what the center one is. The one, and it also has the daily squeeze on it. The one on the left is a relative strength chart, which I probably will do a technical Tuesday on at some point. But this basically shows how it performs versus its peer group, its own industry group. In this case, it's underperforming. The next one is how does it perform versus the S&P? These are the two that are most important to me. It's underperforming the S&P. How is its industry group doing versus the S&P? It's outperforming. How is the industry group doing versus its sector? In this case, technology. It's outperforming. So semiconductors are outperforming technology. And how does technology do versus the S&P? It is slightly outperforming. So what I really want to see over here are the top two panels. So let's take a look at these, and then I'll do some more. Here's KLA Corporation. You can see right down here, momentum just crossed the 0 line. That's how this scan is set up. It's above the 21 up here, so everything looks good. It looks like it's actually might be starting a squeeze here soon. It's near the center, but actually above the center line, which is good. And MACD is above 0 up here, although it's declining, so something to watch out for. And then it is underperforming its peer group. Again, these are semiconductors, so just like ASML, it's not doing well. Lucid, this is a EV company. Again, there's the weekly histogram just moving higher above 0. So it's just starting to perk up. It had a PPO cross right here. So it's starting to move higher. So that looks like it might have potential. There is, I would draw a trend line across the top of these tops right here, and it's hitting right at the top of it. So it needs to actually break through that. This is a low price stock too. You can see that it has a shooting star candle at the extreme of the Keltner. So this is probably going to reverse and pull back again, although it's kind of got some squeeze here on the daily as well. And it's definitely underperforming its peer group. So a lot of question marks on that one. SMCI, we've heard before, it is definitely at the top of its extreme, but it is just starting to move higher, and it's going to get a weekly 5 crossing the 21, weekly bullish short-term signal. So that's positive, and the PPO is just starting to accelerate higher. So all of those things look really good, just beginning to outperform its peers and the S&P. So it might be just ready, and you can kind of see a inverse head and shoulder on this right here too. There's the left shoulder, right shoulder, and the head right there, and it just broke out today. So the target on this is about 19 to about 48. Let's call it 49. So that's 30 points. So that potentially will get back up here to 79, right around that 75 point, right up through here. That's about where the target is for SMCI. And Valero Energy in the energy sector, outperforming its peers, underperforming the S&P, starting to move higher, but bouncing against the 50. And sitting right in the middle right here. Got a lot of work to do. That's not one that I probably would consider yet, but at some point, maybe. All right, let's look at on the weekly. That was a weekly squeeze. So I want to look at a weekly PPO cross. Let's see what we get here. So that's going to be up here in this panel. All of these, there's 18 of them on this. Here's another semiconductor stock right here. There's the PPO cross. That's what this scan is looking for. So it's below 0, PPO below 0, and it's just crossing, meaning it's just momentum is picking up. I did my very first Technical Tuesday was on the difference between MACD and PPO. So if you're interested in that, go back in the playlist for Technical Tuesdays, and it will explain why I use PPO rather than MACD, but they're basically the same thing. All right, so that's looking pretty good. It's moving up. It's in the 2x, but still has room to move, and underperforming its peers, however. So that's not good. Let's see what else we got over here. Coca-Cola. Coca-Cola, there's the PPO cross and had earnings today. actually on the 11th. So this is the weekly right there. So it had a huge week this week. Since today is Friday, then these candles have completed. It does have a shooting star, so it's probably going to pull back some in the short term, but it definitely outperforming its peers and not yet outperforming the S&P. This is in the staples area, so these are defensive stocks. Light and Wonder, there's the PPO cross right there, just getting above the 50 on the weekly chart, and the ADX just moving higher. So this looks like it's just beginning its run. Got a little bit of a weekly squeeze down there, very slightly, but it's at the top of its Keltner channel, so it likely is going to pull back as well. It looks like that might even have started today, outperforming its peers, and just getting ready to outperform the S&P. It's in the discretionary area. All right, Micron. PPO cross. I don't put a lot of credence in this particular one because you can see how many times it's crossed right there. So that's basically just moving sideways. I like those other ones that I just showed you better than this. Just above the 21, but it needs to get above the 50. Big weekly squeeze though. So this one, when it breaks out, it probably will do so with a lot of power, building up energy right now on the weekly chart. So if this one can make it back up through here, it needs to get above probably 110. But if you want to take a chance on it, you could take a chance at, what is it, 99, 100? Underperforming its peers, as a lot of them in the semiconductor space are. What else do we have? Steel Dynamics. This is in the steel group. Again, there's the PPO, and it's actually now above 0, so that's actually better. It's got a short-term up signal today, so this is maybe just beginning its run actually. A little above the center of the Keltner, so it might have a little bit of room to run still. Definitely outperforming its peers and a little bit more work to outperform the S&P. UDMY, look at this one. This one actually had the crossover back here, so it would have hit the screen back here as well, back in this area. And you can see on the chart on the left, you can see where that is. So this is the weekly chart right there. And if you look at the vertical line on the far left one, that shows you where that would have been on the daily chart. So there still would have been a lot of sideways up and down movement left to go until it then broke out. It did that again this week. And you can see that big candle today went all the way to the 3x. So it's probably going to pull back. I wouldn't necessarily be getting into this one right now, but it's certainly one to watch, underperforming its peer group, however. All right, let's take a look at a couple of other ones. Close that one down. One thing that I did was I created some scans for the Investors Business Daily, the IBD 50, and I did some weeklies for that. So IBD basically identifies 50 good stocks that usually have great fundamentals normally, as well as technicals. So I'm just taking their list and then putting some scans against it. This is the 21 day. So this is looking for stocks rising above the weekly, the 5 weekly going above the 21. That's happening right there. And they just had earnings yesterday rather. So it looks like great earnings. Oh, that's the one I just looked at. Let's look at Owl. Owl. So this one is way up here. It's right above the 21. Yes, this scan looked for stocks that had a low below the 21 and had a close above the 21. So that implies recent strength. So you can see it right here on the daily chart, but it still has some work to do to have momentum start to turn around, and definitely outperforming its peers and the S&P over here, which is good. It's following the 21-day moving average right up there. So this might be a good time to enter. Shark Ninja. This is an interesting one, consumer discretionary area. So that right there is the 21. Looks like it's pulling back today as a number of things started to do, but sitting right in the middle of its range. And it has a daily a daily squeeze going right now as well. And then WGS, which had a great run last year, and you can see the run on the weekly chart. That's huge, just continually going higher. So this pullback, this is one of the reasons that I like to do this particular scan, because it pulls back during the week underneath the 21, but it ends the week above the 21. So that's usually during a pullback. So you see right here, it pulled back and now it's heading higher. It actually has a short-term signal. So there's the 21-day right there, right, with the 21-day is the blue line, and then the 5-day is the pink line. So it's just starting to move higher, definitely outperforming its peers and the S&P. So this one might be ready to maybe start to move higher, but it needed to consolidate because it had such a huge run. So it needed to consolidate. This is from basically October until now. It's been consolidating sideways. All right, let's look at one more. This is the weekly again, IBD. Let's see if there's any PPO crosses on IBD. None. The IBD 50 doesn't have any that are crossing. Let's see if the ADX line and above the 25 line, see if there's anything doing that. Only one, Monday.com. So Monday.com just reported, looks like it had great earnings, just heading higher. This way up in the 3X Keltner, so this probably needs to pull back a little bit, but it looks very strong. Looks like it had great earnings, definitely outperforming its peer group and even more so today, as well as the S&P. So that's a strong stock, and you can see when it pulls back right here, this is what I'm looking for. This is what this scan down here is looking for, the ADX line crossing, but that scan that I ran above the 21 is what it's looking for right here. So when it pulls back below the 21 and then goes back higher. In fact, I created a scan using the IBD 50 for just stocks that have just today gone below the 21. So that means it goes below right there. And then this one's a daily scan, it's not a weekly, but it goes below the 21, and that's where you start watching it, because usually these strong stocks usually will bounce back. So I actually created a list. Let's see. I created a list, IBD watch list. These are the ones that made that scan today. And these will not look good right now because it just hit the scan. But these are the ones that I like to put in a watch list and watch. So you can see how it comes back to the 21 and goes higher. Now it's pulling back right now. So that's what I'm waiting for. ARGX, same thing, waiting for a pullback. Kava had a big run down, then started to come back up, started to move down again. Sitting right in the middle, though, of its range, Keltner range. And the weekly actually looks like it might be just starting to turn, other than this week, it started to move down a little bit. Coinbase, here ServiceNow is on there. Same thing, looking for it to get below the 21, and then I want to watch it. So that's why it's on the watch list. It's way down here in the 2X Keltner right now. But the momentum is not moving up yet. In fact, it's accelerating to the downside. So it's not time yet on that one. Here's Reddit, which just reported and missed. So Reddit is below the 21 right here. And Rocket Lab, I think they reported too. No, they're reporting on the 27th. So they're pulling back right now, right to the 21. So they've just pulled back to the mean. This one here might be setting up. It's actually just started the squeeze. Momentum is to the downside. So I would wait and watch this squeeze a little bit longer. And maybe actually for earnings, it might actually take off from there. So we'll see. And then Toast is another one. Pull back right down to the 21 day. And so I'm just watching it. Just started a squeeze on the daily as well. All right, so that's it for today. Thanks for watching. Let me just take a look over here and see if there's any other weekly squeezes that I didn't get to. So those are some of the weeklies for IBD, and on the daily scan, weeklies. Here's the 21. I'm not sure if I looked at this one. A lot of the same names on here, though. CDNA looked interesting. So this one here is just going above the 21. You can see the 5-week is just crossing. The MACD is just crossing higher. So this one might be just getting ready to move higher. It's got a long daily squeeze on it right now. So you can see this sideways movement on the daily. If it gets up above 26, then it might really take off from there, outperforming its peers and its industry group. It's in the healthcare industry. All right, that's it for today. I hope everyone has a very nice Valentine's Day. I will be going out tonight. I will be updating all of this later. If you want the newsletter, it comes out on the weekends. This weekend, I should be able to get it out tomorrow, Saturday, so it's right there. There's no subscription required. The YouTube channel is always right there as well. So most of the other charts that I use do require a subscription, but the charts on this page do not. And the most important one is this, which is the secular bull market. And you can see until these things break below these lines, the pink line there, the 0 line here on the PPO, MACD, the 200-week moving average down here. Until those break, we are still in a secular bull market. And yes, it looks like they're starting to roll over, and that could be the case. And that could result in a pullback similar to what happened in 2022. So there's 22 right there. There's the rollover right there. We're getting close to that, but it hasn't actually happened yet. But if that were to happen, we may get something similar to 22, and then we'll watch this 200-week moving average down here. So I would expect a pullback to be short, brief, and then we'll be looking for where the bottom might be, and when it starts to move back higher, that's the time we're going to load up completely on stocks. But this is on the main page. It does not require a subscription because this is so important. You can look at this link right here to take a look at secular versus cyclical markets, including this chart right here, which is basically what I just showed you. This is the secular bull. This is the bear that we went through. This is the bull that we are currently in. And these are the previous ones all the way back to 1929. So it's a pretty interesting read, actually. All right, that's it for today. Thanks for watching, and have a great weekend. Have a nice Valentine's Day. The market is closed on Monday, so I won't be doing a video Monday. And I hope everyone has a nice long weekend. Take care.